Good morning, folks. Hope everyone's week is off to a great start so far. Just about to get everything all set up here and started for the stream. Pretty interesting PPI data we got this morning. Certainly cooler than what the market expected. A little bit of a relief bounce in S&P futures as we saw that. All right, so let's get this show on the road. Thanks for waiting as I got everything set up there. Appreciate you all. All right, so let's get this show on the road. Thanks for waiting as I got everything set up there. Appreciate you all. All right, so let's get... Sorry about that. So first, we've got the general disclosure here. All Bookmap Limited materials, information, and presentations are for educational purposes only. It should not be considered specific investment advice nor recommendations. So, with anything else, sit back, learn, figure out whether what I'm talking about applies to your process, suits your financial goals, and do your own homework on this sort of stuff to make sure that this sort of trading system is something that you want to engage in as well. That's the most important part. We're all different as traders. What might work for me may not work for you. What might work for you may not work for me, and that's why I like to say that. Now, the folks at Bookmap would love for you to join their Discord. They've got a lot of cool stuff going on there, including regular educational events. You can use the QR code on screen, I should say, or the invite, discord.com/invite/bookmap to join them. A little bit about me. My trading journey began 20 years ago. I'm dating myself now. Started with stocks and then I moved on to options, futures, and commodities. I had a lot of fun in the beginning because these were the easy days of a bull market in 2005 and 2006. But things did get harder. In late 2007, I started to get a little bit more concerned about the way the markets were looking. Started to look like a big double top in the S&P. So back then I was just a discretionary technical trader, and my system said, sell and see if we can make a break. Because if not, we could see a pretty big reset or even retrace lower. I didn't necessarily expect the financial crisis that came. In fact, all I had were some clues that, anyone with a pulse could get a mortgage, but I didn't know to what scale the financial system had exposure to all that mess. And so that was a really formative experience, those years from really 2008 to early 2009. Seeing the financial system under stress, learning more about the plumbing, the importance of monetary, fiscal policy, earnings, liquidity, emphasis on the latter there, really was formative. And it led me to be a much more systematic trader, really leaning into the data, letting the data help to guide how I make my decisions, taking a lot of that emotion out. And I know a lot of people struggle with emotion in their trading, and I understand why. It's an emotional process. We're playing with our money most of the time. I know some folks trade other people's money, prop firms, sims, things like that. I get that. But I trade my own money. I've never done the prop firm thing, so I don't, I really just kind of connect to trading as something that is deeply personal, deeply psychological. You have to master your own mind. And that's one of the parts of the trading journey that doesn't necessarily get enough discussion, but is super duper important. So, something to think about. If you want to learn more about trading psychology, I've got a great video on my YouTube that you're welcome to check out. So, I began working with Bookmap in early 2022 because I saw great value in the way their platform displays market data. And we'll get into that. I co-founded TraderAid in 2022 and MacroVisor in 2023 to share my experience, ideas on market opportunities, and education. I also build a number of unique tools and models, and I provide one-on-one coaching to traders of all skill levels. One of those tools we'll see today is the SPX Options Visualizer. So why do I watch order flow? Why is this an important part of my trading process? Some folks say it's so discretionary, you can't really gain any value from it. I would beg to differ with that. I think, again, to each their own. As I said earlier, this isn't one size fits all, but for my trading process, I look at it a bit more systematically because of some of the probabilities that certain setups imply. So when I'm looking at order flow analysis, I'm watching for differentials, or what we call deltas. That's a big part of it. And that's one thing that Bookmap makes pretty easy because you can see the delta in the volume bubbles. For example, you can see it in the volume bars on the bottom if you set it up. You can see it in the session volume profile. That's all really important to gauge which side is the aggressor, who's taking control of the order flow, and then how much of an impact that has on price. The other area that I think is really interesting, not just what's actively being shown, but the passive order flow, the icebergs. Now, there's a lot of conjecture about what an iceberg is or isn't when you're looking at volume profile and trying to infer naively. But when you can actually see the order flow and you can actually identify what is an iceberg based on the orders being placed by larger trading desks, that's actually quite helpful. Those larger sets of icebergs, like when you see thousands and thousands of icebergs layering in, that's something that I pay a lot of attention to because I think it's pretty valuable to be able to understand more about how icebergs impact price discovery. Right? Because often is the case, if you have an exhaustive move higher and you start to see icebergs layering on, that can mark a point where you may see a reversal, especially when it's very large size in those icebergs. Again, thousands and thousands going into the tape. The other side of the trade can't ignore that, right? So those buyers that push that exhaustive move higher, if they haven't already started to take profits, they're probably going to start to look at that large order flow and say, I don't know if I necessarily want to get in the way of hundreds of millions of dollars in notional being dumped on top of this. Exhaustive trading action, as I just talked about, when one party gets offsides, that's something I wrote an indicator for that's on the TraderAid Discord that identifies exhaustion in S&P, NASDAQ, crude, 10-year note futures. It's pretty cool because what we're really doing is we're watching and waiting for one side to get so aggressive, but not necessarily seem to have the ammo to follow through. So those exhaustions can, with icebergs especially, mark important turning points in price action. And why do I use Bookmap? I use it because it is an invaluable resource for my trading. When I'm doing short-term trading, and that's really what Bookmap is all about. It's all about the short-term trading, right? So I think it's a really important part of learning about how to trade in the short term, how to trade, how much importance you can put onto the order flow component of it. I think all of that's really important, quite frankly. Give me 1 second. I just need to make one adjustment. All right. So it's cool because if you think about the way the markets are operating, there's really two primary drivers of what we see. One is the options flow, which translates into demand and supply in S&P futures. The other is the direct implications of those offers and bids in the heat map, right? Where the liquidity is interested in transacting. Those two have really big impacts on price discovery, which is another reason I like Bookmap because I can see it all in one place. And that's why I like the idea that Bookmap brings it all together. Powerful visualization, combining key data on one screen, and it's easy to layer on new features. Like I said, I've built many add-ons for Bookmap, and each one of these add-ons started with the idea of adding nuance, adding another layer of being able to analyze market data and price action and more. And now it's become a tool that it's indispensable to my market analysis and my intraday trading. Now let's talk about a couple key levels derived from options exposure. Above us here, we have a wall of calls, and that is at 6165 SPX. That's a level that's quite a bit higher than where we are right now, but it's worth watching. You know, you never know what could happen, particularly after CPI, if it comes in cooler than expected. But gamma flip at 59.59, cash right now implying open of about 58.55. So we're still deep in negative gamma territory. Vol trigger 5800, as well as the put wall at 5800, meaning if we push meaningfully below that 10-12 handles and we start to build some acceptance, you can see some follow through, but you can also see the tape get even more volatile than it is in this illiquid negative gamma environment. And my daily pivot for today is going to be 59.02. I don't think we're necessarily out of the woods unless we can really push above there. So that's the level that I'm watching to get a sense that the bulls are back in control. So far, not really seeing that level get, and this is ES, not SPX, to be clear. There's about a 38-point delta between the two. So right now, that's sort of the struggle zone. We popped up above there, and we've sold below there now. So we're going to watch 59.02 as a decision point to see whether the bulls get control back in S&P 500 futures this morning. And some exclusive deals for our awesome viewers out there. If you'd like to get up to 40% off Bookmap, this exclusive deal is available at TraderAid.com/bookmap. Click on the link or copy it to your screen, and scroll down to the special offers at the bottom. That's TraderAid.com/bookmap. If you'd like to get 20% off of TraderAid.com, we have an amazing Discord trading community with cutting edge tools, including some of those that I mentioned on the stream. And we've got a lot of great actionable ideas, education, and amazing people from all skill levels helping each other out, learning more about trading and finance. You can use the code Mayhem20 at checkout. Just visit TraderAid.com. So with all that being said, we're going to close out of this presentation and start talking about what we're seeing here pre-market with a little bit of a primer on Bookmap as well. So let's get into the S&P 500 futures here pre-market. And we can see the overnight session had a decent bid up until Europe opened, and then we started to see really some selling pressure up until PPI. PPI came in quite a bit cooler than expected, and that lent a decent bid to this market. So that's another thing to take into consideration, is just that there's so much anticipation and importance being put into this data flow right now, with what's happening with inflation, what's happening with labor. It's in terms of the economy, it's a bad news is good news and good news is bad news environment. And in terms of inflation, it's a very sensitive situation. The market does not want to see a reacceleration of inflation, and it will celebrate the lack thereof pretty vigorously, as we can see. So this morning, we got that basically 0.6% upside, an immediate reaction to PPI. What was interesting, however, is 10-year yields actually moved higher as well. So I don't know that the market is giving us an all clear. I think it really is the big event this week, and I've been saying this on the Discord as well, is really going to be CPI. The markets want to see more signs that inflation is cooling down. So in reaction to this PPI, we can just zoom into this event a little bit. We can see we had this big spike higher. Sellers started to more aggressively absorb that flow. That's what these red boxes are. That's another one of the indicators that I've built. And that absorption did become a bit overwhelming for buyers. Then we started to see some buyer exhaustion here, these green circles. And from there, we've just sort of been falling and consolidating. So going into today, again, we're looking for that 59.02 pivot to see if we can break above that level. There is some aggressive buy deltas above there as well. So right now, buyers are a bit off sides. With all those buy deltas from the earlier price action, we have to assume that much. We've also got a reasonably chunky offer up here, before the cash open at 59.20. We'll see if that continues during the actual regular trading hours of the US. But for now, we've got some things to take a look at. It's also not a incredibly liquid market even still. So that's another thing that I like to talk about, because folks don't necessarily consider this in the calculus of their sizing and risk management, but the inherent potential volatility of what you're trading should determine two key things. A, where your stop is. If something's more volatile, you need a wider stop. There's no way around it unless you want to be stopped out and churned and kind of beaten up. You have to use wider stops in a more volatile trading environment. Two, because you're having to use wider stops, you're implying that you're taking more risk. In order to mitigate that from having a negative impact on your capital, that means you have to take a smaller position size, right? So more volatile markets, smaller size, wider stops. That's how we approach a tape like this. And it may not sound quite as exciting as going full port long or short and just hoping for the best and then sweating bullets over it. But that sort of adrenaline rush and occasional dopamine satisfaction from winning is pure gambling. I don't like to do that. I like to take a much more durable, disciplined, and systematic approach to my trading, which also means I don't want to risk too much capital on a single trade. I always want to make sure I run my trading like a business. And that means I'm buying and selling inventory, and I'm capturing the spread in between. And I'm only putting enough capital at risk such that I'm still able to remain solvent and liquid and keep on trading, right? That's really the way to do it if you want to run a marathon. If you want to run a sprint and run the risk of blowing up your account, you can always employ high levels of leverage and, really, really speculative areas of asset allocation and hope for the best. And maybe you win the lottery, or maybe like a lot of other traders, you get taken out on a stretcher where your account's been blown up. I'd rather not see that happen to you. I'd rather see you become a disciplined, durable member of the trading community against all odds, because the odds are against traders. I've seen a lot of folks fail at this game over the last 20 years. But to put the odds on your side, you got to do the work, you got to be disciplined, and you got to trade like you're in a business, and you want to keep your doors open next day, next month, next year. Didn't want to get on the soapbox about that, but I found myself there. So I'll get off now. I hope that's at least a helpful rant for folks out there. Let's take a look at the NASDAQ. NASDAQ overnight session, pretty similar. Had a bid up into the European Open, and then really just seeing some selling pressure up until PPI, and then we saw just a whole mix of order flow there. And I'll tune that indicator up a little more on the NASDAQ so it's a little less noisy. But essentially, there's a whole lot of volatility that I would expect on this tape. This is, again, not a super liquid contract. We've kind of been all over the map in the overnight session. And I would expect today to be a day where the path of least resistance is likely to be higher. I do expect it to likely be a green day, but we got to respect the opening range. We've got to respect the prevailing options flows in the indices, the ETFs, and some of the stocks that are bigger influencers of the NASDAQ and the S&P 500. Now let's also take a look at 10-year note futures. This was interesting because we had this pop after PPI and then immediately a pretty big reversal. And now we almost got back to flat. We've come off that just a little bit. But what that's telling you is that the bond market doesn't necessarily give that PPI data the same validation that the equity market has. And I think that's just a little bit of a concern because, again, it's the long end that's really been putting a lot of pressure on risk assets of late. And that is really 10-year yields is one of those areas of the long end that's creating that pressure. Taking a look at Bitcoin here, Bitcoin down to 96,440, but really rebounding nicely off of its lows. It had been below, believe it or not, 90,000 just, I believe, earlier yesterday. So this is a pretty nice little rebound up about, what, 8,000 off its lows, but also off its highs from earlier today. So like we're seeing a common theme here is we had this reflexive pop higher after PPI, and then some of that move is being faded. Market's opening in just about 10 minutes here. And we are seeing just a little bit more testing of that 5902 pivot ahead of the open. We're just going to bring the S&P futures back on screen here. And there is some convergence between that 5902 pivot and the point of control just around 5905 as well. So buyers really want to see a break above that point of control and get closer to these aggressive buy deltas. So they're basically getting back on sides because these are some pretty aggressive buy deltas. So there, you can reasonably infer by looking at the session volume profile that at least a good chunk of these orders were bought to open. Some of it might have been bought to close. That is to say, maybe you sold to open or shorted the futures and then bought to close. But I'm going to assume, because often is the case, that a lot of these buys are also buy to open. So the further we get away from that, the more offsides those buyers become, and they become more likely sellers. But the closer we get to those levels, the more likely it is that those folks are more comfortable. So pre-market, we haven't really gotten far enough away that I think too many of those people were selling aggressively out of that exposure. So it's going to be pretty important during the regular trading hours to see how we navigate that area of those aggressive buy deltas. And then we've got potentially some bigger offers overhead. We'll see what happens after the cash open here. And in terms of today's calendar, we pretty much had the most important event of the day. That was PPI this morning, coming in cooler than expected. We do have a Fed speaker or two. We've got Schmidt at 10 a.m. and Williams at 3:05 p.m. We've also got U.S. Secretary of State Blinken speaking at 10 a.m. I don't think that's going to be a big deal for markets. So the bigger event volatility catalysts are kind of out of the way here for now. Which is good. That kind of means today is a day that really is more about order flow. And parsing that cooler than expected PPI data, which again, it was pretty decent. I mean, core PPI month over month came in at 0% versus a forecast of 0.3%. That's a pretty big miss. And that's a good thing to see because what PPI tends to do is have about a 2 to 3 month lag before it hits CPI. So what this is telling you is you might see a little bit of relief in CPI as we get closer to that 2 to 3 month window. Got just about 5 minutes left until the U.S. markets open. Can I take a look at Meta? Yeah, absolutely. I'll take a look at Meta. Let's wait till the markets open, though, because I don't find a whole lot of value in the after hours versus what's happening during the regular trading hours. So we'll take a look at Meta after we open and get a little bit of order flow going into that. We'll look at all the Mag 7 stocks So it'll be interesting because we're going to look at the S&P, the Nasdaq. We'll look at gold and silver bonds and the bigger mega cap stocks and see what's going on with their flow, where there might be opportunities, resistance, support, all that good stuff. Rosario asks, how do you determine your market structure with Bookmap? So I look at longer term charts to determine the sort of macro market structure if we're looking at daily and even 4 hour and 1 hour. And I'm usually doing that in Motive Wave or TrendSpider. And then when I'm zooming into the micro market structure, I'm using Bookmap, and you can either zoom out to see that all the way out to, pretty much like 6 hours or so. You can go a little longer, but I don't find quite as much value looking at it that way. You can also zoom into the really, really granular. So for me, I like to look at a couple of different charting packages to really figure everything out. Bookmap is my intraday, and then I'm using Motive Wave with my dynamic S&P pivots for my broader market structure. And I've got a daily chart with the swing pivots and then an intraday chart with the intraday pivots. And that's a really important part of my process. And my daily chart with my swing pivots also has trend analysis built in, swing high, low, long, short opportunities built in. So, and then the Ichimoku cloud. And I'm about to have a swing chart set up for NQ as well on our Discord. So I basically take that market structure analysis and I try to automate as much of it as I can, both for the generation of actionable pivots and the health of the trend. What is the relationship between PPI and CPI? They seem like they are measuring the same thing. That's a good question. So PPI is the prices that producers are paying. CPI is the prices that consumers are paying. These are both survey-driven data sets. So PPI, think of it like if you're going to the grocery store or you're going to the gas station or you're going to, a store to buy furniture or whatever you're doing, whatever the producers of those goods are paying, that's what's surveyed. So the producers that supply those stores, that's what PPI is surveying. Then you as a consumer go to those stores, you pay those prices from the stores. So not only are you dealing with the prices that the producers pay, but then what they pass on to the stores and then what the stores may mark up on that. And that's what CPI is. And that's what there's a reason why there's that 2 to 3 month lag time between PPI and CPI, because those prices have to flow through to the end consumer. So think of PPI as really where the goods are being produced. Those producers are telling us what they're dealing with on the cost side. And then CPI is us consumers providing feedback about what we're dealing with on the cost side. Let me know if that helps, Rando. Just less than 1 minute away from the U.S. market open. Markets are now open. Seeing a little bit of buyer exhaustion off the open here in NASDAQ. And some sell side orders coming through, some passive iceberg sales there on NASDAQ as well. Seeing a little bit of that selling on S&P, but not quite as pronounced. You can see that 5902 pivot now pretty much the point of control, so market's giving it a bit of importance as well. We are pushing lower below some of those aggressive buy deltas in the session volume profile. And seeing some of that selling pressure continue here in S&P. Let's start exploring what's going on with some of the larger weightings in the S&P and NASDAQ, starting with Apple here. And we're just going to use a 5-minute time slice since the market's just open. Apple's actually pretty resilient. Not looking too bad overall. Let's take a look at its pricing here. It's up just about 1/3%, double APL. And we're just going to rearrange some of these here.
So French Pimbero says we keep the 3% deficit targets in 2029. And Bearer makes 2025 growth forecast of 0.9%.
Amazon taking a bit of a pull off the open, bouncing off of its lows. Got some decent demand below Amazon, and Delta that favors actually upside. There's more interest in higher prices on AMZN. Big level at 222. Just about to test that point of control around 220.60. Then we have Alphabet or Google, whatever we're calling them these days. That also had a pull off the open and is bouncing off those session lows, pushing above the point of control up towards the session highs. Got a decent amount on offer around 193, 8,332 shares. And a big bid below at 190. It's about 12,000 on bid there. And there is more interest in lower prices on Google today, with a delta of about 413,000 on the bids versus offers. Meta taking a pull off the open here. Made new lows, just bouncing modestly off that, but looks a little bit weaker than some of the other stocks we've been looking at, like Apple and Amazon. There's some decent demand zones below here. You can't see quite as much interest in offers above. And you can see there's a delta where bids are in excess of offers by about 55,000 here. So I'd be looking at 597. That seems to be an area where there was some interest. There's some demand that came in. There's some more that's coming in now. Now we can see some demand coming in at 600 as well. That may offer some support. And we look at the gamma profile of Meta, we can see there is a pretty decent area of call and put exposure around 600. That is a bit of a magnet level. So it's not terribly surprising to see us kind of getting pulled into that again. So that's, again, looking at the gamma profile. That's something that I have a tool that I built that's available on our Discord that you can use to query any optionable stock, ETF, index. This is what that looks like. And this is that big zone of demand for both puts and calls in Meta at 600, right? So we're in positive gamma territory for Meta right now. That is constructive overall for the trend on the stock. And 600 likely to offer a decent amount of support and be a bit magnetic as well. So ships, let me know if that helps on Meta. Overall, 600 a key level to watch, both based on where we're seeing interest coming in to order flow, but also where there's interest that's been built in options. All right, we'll move on to Microsoft here, and then we'll go to NVIDIA and Tesla. Microsoft had a pull off the open, but it's actually pushing to new highs now. So it's actually looking quite constructive. And many of these other stocks seem to have kind of a similar look. They got sold on the open, and then they're starting to make this push to new session highs here. Microsoft has a large level overhead around 420, 5,611 shares on offer. There's also more interest in higher prices on Microsoft, about a delta of 239,000. And Microsoft has a pretty interesting distribution of options interest, but like we see here in Bookmap, on the gamma side, on the options chain, 420 is a pretty key level as well. So that would be an area of resistance I'd look to test, and if we can break above it, I think we'd see some pretty decent continuation. You'd probably see folks rolling their options positions higher as well, which should be liquidity positive or supportive for the stock's price as well. So let's watch that 420 level. That's going to be key for MSFT. NVIDIA here, this has been a stock with some vol lately. We know they're a leader in the AI space, but they're having some problems with their deployments of the Blackwell racks. Some of them are having some overheating issues, other kinds of bugs causing delays. And then there's also more trade war saber rattling. The Biden administration as a final salvo on their way out, saying we want to further restrict the availability of these chips in some countries we see as less than friendly to U.S. interests. So NVIDIA did have some pressure yesterday and then started to regroup after hours last night. And today we saw a bit of a pull off the open, and now we're just bouncing below that point of control. And looking at the profile of the gamma in NVIDIA tells us that 130, 135, and 140 are going to be pretty important levels to watch for this stock. Building above 130 this morning and 135 is constructive. And the market's telling us right now that just above 136 is kind of the line in the sand that it's watching with that point of control and the session volume profile by Delta from this morning's open. And then we have Tesla. Tesla off to the races this morning, trading above 420 to 421.54, up 4.52%. And the gamma profile on this gamma squeezy beast shows us that 400 is an incredibly important level for this stock. That's really where there's a big base of calls and puts. That is an area where we found support yesterday. So not too surprising seeing us sort of make a trampoline bounce off that level into today. Overhead, 425 and 430 are important levels to watch. And there is a bit more interest in bids than offers on this stock overall today. Let's take a look at gold here. Gold trading 26.74. Just about flat, down a little over 0.1% here. And my thought on the precious metal is that it needs to consolidate for a bit. It is an uncertainty hedge. We have plenty of uncertainty this year that we can expect. So I do expect gold is likely going to rally up at least another 12% in the first half to $3,000 an ounce. I do still think that's on the table, but I think the big risk to that is rising rates on the long end and a strengthening dollar. They can both kind of take the wind out of the sails of gold, and they have of late. But I do think that gold is going to have enough interest as an uncertainty hedge, a portfolio diversification tool to likely push higher to new all-time highs. So I'm watching gold for that basing out to really add to that swing long position. And I think it's kind of starting to show us that it's making that base here. It's starting to kind of consolidate off of its lows, make a push higher. So we'll be watching gold pretty carefully. But if it can make a new higher high above that last high, let's call it above 27.60, I'll say, you know, the low really does look like it's in, and we could be making a pretty good push from there. Silver doesn't look nearly as constructive as gold. Silver is, to me, looking like lower highs and lower lows. I do think eventually this could turn into a bigger bull flag on silver and we could break out, but it really, sadly, all comes down to China. Believe it or not, it's all about China right now. And the reason it's all about China for silver is because China accounts for the second most global demand for silver out of the US, outside of the US. And most of the demand for silver, believe it or not, it's industrial rather than investing. It's not as much people hoarding bars and coins and, you know, building up their physical stashes. It's really more about industrial demand for electronics and other use cases. There's big use cases in EVs and solar and soon potentially battery technology. But until China really stimulates in size and brings their economy back, especially for domestic consumption, I think silver is just going to sort of be in the doldrums. So we're looking for potentially as early as this quarter that trade tensions between the Trump administration and China to reach a point where China says, you know what, we're going to start to unleash some more domestic stimulus. But we also need to be careful about fool me thrice. It's been over 2 years that the Chinese communist regime has been promising larger amounts of stimulus and failing to deliver. So we need to see substance behind the words. For now, best to be cautious about silver, but look for that potential kindling. 10-year note futures here just slipping a little bit, kind of getting closer to those lows. Let's go back to where we were just around that print. So we can see before the print, we're trading just around 107.085. Now we're trading 107.115. I would just be looking for this to be a pretty volatile tape today. We don't have any treasury auctions this week of any consequence on the longer end. It's really just about bills. So I think it's going to be more about the treasury market parsing the data from today and also some degree of hedging flow going into CPI tomorrow. Wouldn't be surprised if we're seeing some of that hedging flow in the S&P this morning and in the PM session as well. Let's get back to the S&P futures. We can see we are pushing above that pivot here. So those major stocks we were looking at, some of them started to kind of base out from their new lows, push back to, or even make new cash session highs. And that's helping us to start to build above that 5902 pivot. So it's starting to look just a bit more constructive for the S&P here. We're consolidating, we're building some acceptance above that pivot. We're pulling the point of control just a little bit higher. And you can see for the session volume profile, we're back in those more aggressive buy deltas. So those buyers feeling a little less nervous here. So if you want to get bullish on this, you want to see us kind of continue to push to new session highs. If we're looking at the 20-minute opening range, we'd be looking for a build really up above 59.10 or so. Right? We've still got about 4 minutes to build that range, but with the way that this thing's sort of moving sideways, I'm going to assume we're probably not going to get too much higher. So looking at that, assuming around 59.10 is the top of that 20-minute opening range, we'd want to build some acceptance, maybe 5-6 handles above there, consolidate for a bit, build some volume above there, and then start to grind higher with options flow supporting that move. And we can see some of that early options flow coming in to the SPX options visualizer, targeting some higher prices here on ES with the most active call strike. Yeah, absolutely. Bookmap is available for Indian markets as well. They've become very multinational in their efforts. So I believe you can do that. And just check out traderaid.com/bookmap to be able to take advantage of some of the offers there. But they've got Bookmap for India. I know that for sure, being on their Discord and seeing the efforts they've made to push into that market. It's really impressive to see how the company has scaled into a variety of different global markets as well. And we are seeing just a bit of a pull here. We are below, once again, that 5902 pivot. Just getting close to the bottom of that opening range area. Seeing some folks get stopped out. That red circle with 139 showing 139 contracts stopped out to the sell side. Okay, hearing they don't offer Indian markets for new members at the moment. So let us know as that changes. Perhaps there's a waiting list or some way to be notified. Let's go ahead and check on the NASDAQ here. Pretty chunky range in the NASDAQ as well. And we've seen a similar move as the S&P, just kind of getting up to that point of control, testing it, and then fading back a little bit. Let's look at some of the major stocks here. And we're going to zoom out just a little bit on the time slice because we've got now about 20 minutes of data to look at after the bell. So Apple had a really powerful move off the open, made new cash session highs until it got up to 236. It filled the 10K offer, but buyers didn't have enough demand to push beyond there. So we saw Apple pull back, just float above that point of control for a little bit, regrouping and consolidating here, looking like it wants to try to make another push higher. Then we've got Amazon. Amazon's been actually hugging the top of its daily range, and it's looked pretty constructive. Off the open, you had a little bit of selling pressure, made a new low, but then immediately turned around and started to push higher and higher, making new lows pretty consistently throughout, or new highs, I'm sorry, pretty consistently throughout this session, pushing up to 222, where there's now 19,183 shares on offer. So that is something to watch pretty carefully here, because Amazon is showing some sizable relative strength. Company shares up 1.41% today. And I say relative strength because the NASDAQ itself is only up 0.6%. So Amazon's kind of doing a couple laps around the NASDAQ, showing some relative strength versus the broader index, which is a constructive sign. If you're bullish of the stock, that's exactly what you want to see. Alphabet, it's kind of just sideways overall. You know, this is a stock that it opened up, it had that pull like the other NASDAQ components, but it did rally back. It made a new session high, and since then it's just been sort of consolidating. So not a lot to see in Alphabet or Google, whatever we want to call that one these days. It's about flat too. So not a lot going on there. Meta does not look terribly amazing here. It is sort of hugging its session lows, down close to 2%. And we can see it's been a story of pull at the open, kind of a lackluster bounce, and then fading that bounce and making new lows. So watching that all-important 600 level could be a bit of a magnet, but for now, we're breaking below it. And then there's Microsoft. Microsoft is fading from its highs as well. It's bid up just about 0.15%, testing that point of control. And we can see that over the last, say, 30 minutes, we had that drop, a powerful pop, got almost all the way up to 420, and then we've just been sort of consolidating and testing that point of control. So Microsoft just looking a little bit tired here. Then there's NVIDIA. NVIDIA cutting to new lows here during this cash session, up just about 1.10%. We'll zoom out, yep, just to that 20-minute. And we can see it's a kind of similar story as Microsoft and some of these others. Pull at the open, a bit of a bounce, and then a fade. And Tesla was doing really well earlier, right? We saw that big bounce up to above 420. There was a lot of supply taken out by buyers, and it looks like they got tired, because from there, we've retraced a good chunk of that move, and we're now back to the point of control, up about 3%. Still a good gain on the day, but the stock is definitely showing some signs of being tired here. So let's move back here. I've got about 6 minutes left on the stream. Appreciate you all tuning in. S&P cutting to new lows, getting closer to Gamma 5, which might offer us a little bit of support. We do have a lot more call interest than put interest overall today, 3,000 plus 3,000, so that's 6,000 between the two most active calls, 4,000 between the two most active puts. So we'll see how that shapes up as we get through the trading day. Still early yet in those flows. But on the put side, a lot of interest in that 5,800 SPX level. That's where the hot put is, the put wall and the vol trigger that we covered earlier in the session. And we're continuing to cut to new session lows here on the S&P and on the NASDAQ. You can see S&P cash now bid up 0.17%. NASDAQ cash bid up just over 0.3%. And the Boomer Index, the Dow 30, bid up 0.2%.
At 10 a.m. Eastern Time, we expect comments from investors.
And we can see that hot call continuing to move higher now. It's just around the gamma flip level. There's a little bit of, they're very close to each other, those two levels. So let me just take a look here on the Discord. In our flow room, I get these levels updated every minute as well with charts. So it's kind of handy. And hot call at 5979.5 ES, 5,000 trading hands there. So certainly seeing some interest in higher prices based on that call flow so far. Mojo, yes, I did just say the boomer index regarding the Dow 30. I love to have a little fun with this stuff. Can't help it. Just like the Rusty is like the Crapco index. Lots of bad companies in the Rusty. 40% of them don't even make money. So, folks, as we round this out, couple reminders. A, I'll be back next Tuesday, 9 a.m. Eastern, with this stream once again, Back to the Futures. B, if you have any questions for me, feel free to reach out. You can always email mayhem@traderaid.com. C, if you want a discount on Bookmap up to 40%, visit traderaid.com/bookmap. That's traderaid.com/bookmap. Scroll down to the special offers. And D, if you want a 20% discount, gaining access to an amazing trading community at TraderAid, use the code Mayhem20 at checkout at traderaid.com. And if you're interested in the SPX options visualizer, you can see there on the right column, you can learn more by visiting traderaid.com/SPX. That's traderaid.com/SPX. And I would say that if we're looking at this from 20-minute opening range theory, we have had a break lower. We're building some acceptance on that break lower. So it is looking like we may have a day where downside's a path of least resistance. But I would remind folks that double break Tuesdays are not too rare. About 62% of the time, you'll get a break in one direction and then a reversal in the other. So that's also important to keep in mind. You can have those head fakes, and certainly the call flow suggests that's a distinct possibility. So keep your mind open, remain nimble out there. Remember, this is an environment where it's more likely you're going to have some volatility. And in particular, this is a week that can be pretty interesting for other reasons as well, because we have options expiration on Friday. So options expiration week means you've got a lot of folks moving positions around. They're not necessarily concerned about lines on charts or volume profile or any of that. They've just literally got to move billions and billions and billions of options exposure around. And as they roll to future expiries, that can have a number of different impacts on the market, one of which is that it becomes a little more volatile. The other, though, because of that sort of price agnostic position rolling, is that some of the scenarios that we may think have higher probabilities due to experience on non-options expiration weeks don't have the same probabilities on options expirations weeks. So that means being more careful with trade selection. Again, wider stops and smaller size, all being important in this type of an environment. So I want to thank you all for tuning in. Always appreciate all you awesome people out there tuning in. I love the questions you guys ask. I love interacting with you all. Hopefully you learned some things from this stream. Tune in next week, Tuesday at 9 a.m. Eastern. I'll be back for the next episode of Back to the Futures. I'll see you then. Good luck trading out there.